Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Shares of online trading platform Grow see profit booking after rallying for 5 consecutive sessions since the listing. Money Control reports the surge in share price is the result of short sellers getting squeezed due to low float.
Rural auto fintech firm Junction adds $22.6 million to its kitty in a mix of equity and debt. The equity part was led by Astanor, will use the funds to scale its marketplace, expand stores and accelerate its fintech arm.
Logistics intelligence platform Pidge bags 120 crore rupees in growth capital. Round was led by global business leader Thomas Myers, Live VC. Pidge clocks 10x year-on-year growth with an ARR of 250 crore rupees.
Mobile-first social gaming platform Stan gets investment from Sony Innovation Fund, raises $10.5 million in its Series A round, will use the funds to expand AI-led personalization, build creator monetization tools, strengthen publisher integrations, and accelerate its entry into other mobile-first markets.
Fears over AI valuation continues to keep global markets on edge, and as investors await NVIDIA earnings, Microsoft joins hands with NVIDIA to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. Google launches Gemini 3 as the battle with ChatGPT intensifies.
Elon Musk's AI firm xAI in advanced talks to raise $15 billion in fresh equity at a valuation of $230 billion. Reports say valuation is more than 100% increase from the $113 billion figure disclosed in March. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's rural mobility and agri-fintech sector just got a major push. Junction, a rural auto fintech platform, has raised $22.6 million in a Series A round. The round was a mix of equity and debt, and the equity part was led by global impact investor Astanor, with participation from InfoEdge and Omnivore. The company, which has grown revenues 13x in 3 years, plans to use the fresh capital to scale its used vehicles marketplace, expand company-owned and operated stores, and accelerate its fintech arm Pidge, which has already dispersed over 1,500 crore rupees in loans. To discuss this further is Rajat Gupta, the founder and CEO of Junction. Rajat, thank you so much for taking time out and being here with us on, Startup Street. First of all, Junction today is more than just a marketplace, right? It's a rural auto fintech platform. What makes your model uniquely positioned to solve the mobility and credit gaps in India's rural economy? And what's the impact that you're trying to create?
Arundhati, thanks for having me here. So we are building a unique business out of that. We started as an tractor or content discovery platform back in 2018 from Alwar, Rajasthan. Even we are still operating from Alwar, Rajasthan and having an office in Noida. So we started solving the unique, you can say, pricing and information arbitrage which exists in this category, where we started from. And being that India is the world's largest market for tractor, there's a lot of pricing and information arbitrage exists in this category. Prior to this, my family is in tractor business, and that's why I have a background that even tractor right now is the most expensive purchase in any of the farmer's life. There's a lot of missale happening, and that was the idea. That's how we started this building upon. Over the period of time, we find out that we cannot only build business on the digital. Then we started back in 22 our offline stores, and currently we are operating 70 company-owned, company-operated outlet across Rajasthan, MP and Maharashtra, and we are selling almost, you can say, 300-350 used tractors on a monthly basis. Even we started 3 more states as a pilot state in the last, you can say, 4-5 months, where you can say the growth will be coming in the future.
All right. You've raised this $22.6 million in a Series A round, right? It's a mix of equity and debt. What are the top 3 areas where this capital will be deployed? There's tech, on-ground expansion, scaling your fintech business. So where is the money going to go?
3 things, as we have a 3 revenue stream, platform business, commerce business, and the financial vertical. So money will be going into all 3 put together. You can say similar amount of money is going in the Pidge, where we are scaling from current 12 states to almost, you can say, 18 states in the near future. We are currently almost, you can say, 20% or 30% penetration in the existing states. We are going to double down this penetration over the period of time. At the same time, our presence in the current, you can say, commerce business, mostly in the Rajasthan and MP, where we are operating almost 50 odd outlets. We will be doubling down in the existing states. At the same time, we are planning to expand to almost 250 outlets or the company-owned, company-operated center by the next, you can say, 18 to 24 months. So almost you can say 50 crore will be going into this. The rest 50 crore will be, you can say, we are putting upon mostly into the platform where we are building AI-led, you can say, platform so that farmer can get the right research about based on their application, they can choose the right tractor.
Sure.
So
And
that's how we are going to use the money. Yeah.
all right. You know, your revenues have multiplied 13 times recently over the last 3 years, right? So you've got these different business verticals. If you could tell us what's driving this momentum, how do you see the mix evolving, and where do you hope to end this year?
This year we will be closing somewhere around 225 to 250 crore, somewhere in between, because of this new GST design. There is a slow in the used vehicles purchase. There is a more push towards the new vehicle. That's why there is an impact. Otherwise, we would be crossing 250 crore for sure. What was the other question?
Which part of the business do you see driving the momentum for you, and how do you see the mix evolving going forward?
So mix will be, you can say it will be more the commerce business, because you can say there's a bigger opportunity exists in India. Almost 1 million, 10 lakh new tractors are getting sold. Almost 15 lakh used tractors are getting sold. We are just selling, you can say, 4,000 odd tractors this year. So it would be more on the commerce side and the fintech side, because platform we are already having like 60% market share in terms of the digital traffic over the tractor and the trucks. So we are the largest platform operating in the rural auto category. We are having more than 70 lakh farmer users visiting us on a monthly basis.
All right. So you see the commerce business driving the growth going forward. You know, like you mentioned, your fintech arm was launched just last year, right, in 2024, and you've already disbursed over 1,500 crore rupees in credit. With this fresh capital, how do you sort of plan to expand your loan products, underwriting capabilities, and partnerships with institutional lenders?
So we find out this opportunity after our commerce business. When we were doing the commerce business, almost 70% of our sales is happening on the financing, and then that's how we partnered with all the lenders. And then we find out there's a bigger opportunity, or the bigger problem exists from the farmers and the small, you can say, customers' point of view. They are hardly able to get the funds for their used vehicles purchase. So we started disbursing, or you can say, association with the beyond our ecosystem. That's how we launched Pidge in January 24. And in the first year of the operation, we disbursed almost 330 crore. This year, we are planning to disburse 1,700 odd crore. And going forward in the next 2 years, it will be at least tripling down from here every year. So next year could be 5,000 crore, and down the line it could be 15,000 crore. What's kind of, you can say, rule engine we are trying to build? The biggest problem from any of the lenders' point of view is how can they price a vehicle when they are planning to fund that. So here are, you can say, core competency coming, because we are operating the used vehicles or the commerce business at ground. We are already buying thousands of tractor, you can say, quarterly. At the same time, because we are valuing them, this valuation is getting used by all these lenders, and that's how they are being able to fund, you can say, the right asset, and we are able to source them the right customer, and that's how we are stitching, or you can say, all three businesses together.
All right. And you know, you have 50 plus OEM partners and 25 lending partners already, right? How important are these collaborations for scaling your rural mechanization? And what new partnership opportunities are you exploring right now?
So we are having fairly good, you can say, partnerships across right now in the OEM per se, be it a tractor and the trucks. Our two new platforms are, you can say, Bike Junction and the Infra Junction, because 70% of the even two-wheeler sales happening right now in the Tier 3 and the Tier 4 India. At the same time, you can say backhoe loader, which is the biggest selling product in the rural India. 70-80% of the sales is happening in the rural India. So we started these two platforms in the last year only, and we are doubling down and expanding the partnership. We are already working with few 4-5 partners in the bike and the construction equipment category, but we are planning to expand it to almost, you can say, 10-15 in the near future. At the same time, on the lending side, we are still figuring out how can we how can we collaborate more in terms of right now we are behaving like in you can say sourcing partner them. We are able to optimize their cost of you can say acquisition of any of the customer. We are able to give them that right pricing engine which we are using for us. We are planning to go beyond. How can we help them in terms of the credit underwriting? We are building a smart rule engine because we are already sourcing almost you can say 20 or 1,000 application at our end. Out of this 5,000 applications are getting passed, so we are building a smart you can say credit led rule engine at our end, which will definitely going to fuel our Finch business in the future.
All right, Rajat, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thanks, Andre. Thanks.
All right. From rural mobility and agri-fintech, let's shift focus to the logistics space. Interoperability last mile logistics platform Pidge has raised 120 crore rupees in Series A funding led by LVEC, the entrepreneur-led fund founded by global business leader Thomas Mayer, with 10x year-on-year growth of 250 crore rupee annualized run rate and a valuation that's jumped 5x since its last round in February this year. Pidge says it's ready to digitize and equalize one of India's most fragmented sectors. From AI innovations like Titan and more to Tier 2, Tier 3 and global expansion plans, the company is betting big on becoming the logistics operating system for Indian commerce. Joining me now is the man driving this vision, Ratnesh Verma, founder and CEO of Pidge. Ratnesh, welcome to Startup Street. 120 crore rupees in growth capital led by LVEC. First, tell us how hands-on are they as partners given their entrepreneurial DNA, and where does this round place your current valuation?
Well, thank you very much for having me here. For us, it was very clear to get an investor who was completely aligned with the vision, who was able to contribute to building a global brand, building a B2B brand. And Thomas is a very experienced entrepreneur and has built brands globally. So having an investor who was not just deploying capital, but also being able to align with the vision and contribute to delivering on that vision. And that's why our preference with Thomas. I've known Thomas previously as well, but it's great to have him on the cap table. In terms of evaluation, as you rightly said, we've grown quite significantly. We are a highly capital efficient company, and currently our valuation firmly places us in a triple-digit $1 million club.
All right, a triple-digit $1 million number. Ratnesh, like I mentioned earlier, Pidge has reported 10x year-on-year growth, a 250 crore rupee annualized run rate with strong margins. What's powering this mix of scale and efficiency?
Well, at the end of the day, look, I think we got to take a step back. E-commerce in India is doubling every 3 years. Supply is not. What happens to e-commerce when you can't end it in a delivery? That jeopardizes the entire ecosystem. Population is not growing, supply is not growing. We were firmly, structured around getting more with less. Interoperability, making sure that we are able to create that digital equalization. 87% of India is undigitized. And how do you bring that digital equalization? How do you bring them at par with the larger companies? So we're on a mission to create that digital equalization and to build that interoperability. What is really powering is this: on one hand, the businesses are able to deliver more, deliver faster with Pidge, and in a more seamless manner. They seem to grow their revenues by up to about 20%, reduce their costs, increase their customer satisfaction. And on the other hand, the vendors, who basically are the delivery companies, who are unorganized, are now able to participate in the ecosystem as equals and also generate more revenue. So we're trying to grow the ecosystem at large, and that is what the purpose of Pidge is.
All right. Ratnesh, you're also targeting Tier 2 and Tier 3 expansion aggressively, as well as planning international pilots. So what are the opportunities you see outside metros? How different is the logistics problem there? And globally, which markets are you eyeing?
Well, up until now, infrastructure played a big role in the lack of e-commerce going into the deeper parts of India. We know that over 70% of e-commerce is restricted to metros and tier one markets. But with the infrastructure improving and with accessible technology that Pidge brings to the ecosystem, we hope to go deeper in driving that adoption, in making digital commerce a reality for the entire country. Bharat needs to be digital, and Pidge is very much at the forefront in trying to make that happen. In terms of the international expansion, look, Pidge is designed for 80% of the world. 80% of the world that is high growth like India, 80% of the world that has low digital adoption and has infrastructure, in the pipeline. We are designed for that. So we will be piloting Pidge especially in the Southeast Asian region, which is something that I'm very, very familiar with and completely ripe and mirrors India's macro fundamentals.
Sure. Let's now talk about Titan and more, your AI-led reliability innovations. What problem do they solve that traditional logistics players haven't cracked yet? And what's the tech moat here?
Yeah, well, look, I think at the end of the day, the consumer behavior has changed.
Yes.
Consumer wants a faster delivery. Whether it's 10 minutes or it's 30 minutes or it's 2 hours, consumer does not expect a 2-day delivery, 3-day delivery. That's the first thing that's happened. That's putting more pressure on supply because 5 years ago, the rider could come with 50 packets and deliver it. There was that efficiency there.
Sure.
Today, the rider has to go one order at a time. Now, if you want to deliver faster to meet the consumer expectation, you need to be able to find allocation that is happening in seconds, not in minutes. Otherwise, it fails. And this is where Titan, a self-learning AI allocation engine, is really smart. It customizes to individual businesses' needs. And similarly, more is really our real-time order clubbing module. We're the first ones who are able to optimize the rider's capacity. The whole idea of getting more with less is to optimize latency, optimize the idle time.
Sure. Currently, you serve 20,000 plus brands across 50 plus cities, working with partners like Zomato, Swiggy, KFC, and Tata 1MG. What's the next big unlock for Pidge?
Well, I think the next big unlock is really our small and medium enterprise sector. The MSME website says 60 million. We know for a fact that there are over 10 million merchants across India that do some delivery. We want to be able to power them. We want to be able to enable them to grow.
All right. India is pushing towards single-digit logistics costs, like you mentioned earlier, and 2x e-commerce growth every 3 years. Where does Pidge fit into this national scale transformation?
I think you got to ask yourself, why is our logistics cost 14% of the GDP when the more mature economies are in single digit? And the big answer lies with building efficiency and digitization. That is exactly the purpose of Pidge. With accessible technology, we want to bring enterprise-grade SaaS on every individual's mobile phone, and thereby bringing that digital equalization. That is where we help build optimization. That is where we help build efficiency, and that hopefully will drive the single-digit logistics cost in our country.
All right, one final question before I let you go, Ratnesh. You've often spoken about building organizational capability and a high-performance, data-driven culture. What does that mean for talent and scale at Pidge?
Well, I think this is all driven by the customers and our consumers as well. Gone are the days when you could please the customer just purely on relationship. Yes, that's really important, but until you can go and demonstrate the tangible benefits to them, to their revenue, to their cost, there is increasing pressure there. So the culture at Pidge really is, data is our God. At the end of the day, data speaks the loudest. And we want to have we are building an organization that is very data-led, that's very objective, that is very factual. And that is really, where we want to differentiate ourselves to any organization as well.
All right. So data is God and it speaks the loudest. On this note, let me wrap up our conversation. Many thanks, Ratnesh, for joining us on Startup Street. Wish the very best with all your aggressive plans.
Thank you so much for having me here.
On that note, it is time for us to head into a short break. But coming up next, Plum looks to cross 500 crore rupees in revenue this fiscal year. However, the D2C beauty brand has no plans for a listing debut. We check in with the firm's founder on the other side. Stay tuned.
Welcome back to Startup Street. D2C beauty brand Plum is doubling down on its skincare and body care segment as it looks to cross 500 crore rupees in revenue this fiscal, but says it has no IPO plans in the near future. Speaking to Shilpa Ranipeta, the company's founder Shankar Prasad said the company's niacinamide range has crossed over 10 million customers and it plans to further innovate and expand this range. Listen in.
It initially started with very small, circle of people beginning to like the product. And about only 2 or 2.5 years back, we celebrated 1 million bright faces, which is when 1 million niacinamide products got sold. And within a short period of time, it started almost going viral in a good way. And we are today celebrating 10 million plus niacinamide products sold, and we call it 10 million bright faces. This is a range that has since expanded from just a serum into face wash, toner, serum, moisturizer, sunscreen, face mask, and lots of other products coming down the line.
Help me understand from a business point of view, with respect to revenue, what is the split looking like now? And going forward, what is your focus area going to be like?
So in fact, we started with skincare largely and then body care. And skincare still is the bulk of our revenue. More than 2/3 of our revenue comes from skincare.
Right.
Body care does very well as well. So overall, between skin, hair and body, we are talking about more than 95% of the revenue coming in.
Right. As of FY25, you've crossed about 400 crores in revenue. You've also turned profitable, and something that's sort of like a rarity today when we look at D2C brands as well. So, really, what's the next leg of growth then? And, what's the kind of growth you're expecting going forward also? Do you believe that a 25-30% range of growth is still sustainable or it's doable for you going forward?
Yeah. If I look at the macros, a 25-30% is a very meaningful target to take, a very, I would say, reasonable target to take. So we have to balance the quality of growth with the magnitude of growth that we are doing. So 25-30% is a number that we will be absolutely very happy to chase.
So you think within this year you will be a 500 crore plus brand?
Fingers crossed. We're already at a run rate level. We're there.
Okay.
For the full year, we definitely will give it our best to get there.
Right. And what's your online-offline mix like?
Sure. So about 70% of our revenue today is online. And about 30% is coming from offline. Offline is something we started in 2017.
Right.
And we've been very measured in our rollout of offline expansion, whether it is exclusive outlets, whether it is general trade, whether it is modern trade, whether it is exports outside of India, which is also largely offline. So for us, the trajectory has been one of steady build out in the offline space, very fast growth in the online space. But the remarkable thing is this number of 2/3, 1/3 has roughly remained the same over the last 4 or 5 years.
Right.
So both segments seem to be matching their growth.
Right. And you've seen about 400 crores in revenue. You're profitable now. So next, what are you looking at investing in? Do you believe that there are new categories that you can enter? Do you see makeup, for instance, something that's also taking off? Or do you want to first consolidate your presence and expand further in the existing categories of skincare, hair care, and body care?
Yeah, to be very honest, there's so much opportunity inside each of these segments, and we have not clearly fully exploited all the opportunities we can in terms of growth. So there really is no need for us to do anything new. Okay. Having said that, makeup, for example, is a big request from people around. But that's not something we are very active about. It's something that we are thinking through. Having said that, none of this will distract us from the task in front of us, the opportunity in front of us in skincare, body care, and hair care.
Right. And in closing, we've seen a wave of startups now hitting the capital markets. Is that something that you're also eyeing? Do you have like a goalpost to get there? Any timelines? Anything you can share about that?
Not actively looking at any sort of corporate actions at the moment. I think our plate is full in terms of the execution opportunity, and that really has hands full doing that. So at the moment, we don't have anything.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.